Everybody, it's Michael and Jenny here, and welcome to this week's episode of the Lincoln Property and Mortgage Show. Joining us at 7 o'clock, we've got a fun-packed evening tonight. This is just in response to a lot of questions that we're getting answered, some of which we've covered over the last 3 or 4 weeks, but actually we thought we'd open up the forum in this week's episode to answer all of those all-important sort of questions, those burning questions that you guys are asking us and that you've reached out to us. So it's not too late to get involved in tonight's show. If you're watching this and you want to get involved and you've got any questions, anything relating property, Lincoln, mortgages, the process, how to get moved, what to do, we're going to give you a quick fire answer today. Rather than just homing in on one or two subjects and have that conversational, we're going to try and cover as many topics as we possibly can for you tonight. So let's start off with the credits, Jenny, and we'll dive straight in.
Sorry, I'm a bit disorganised tonight, but here we go. Here comes the credits.
Here we go. Let's go again. Roll VT. Oh, we've got the still.
It's not even working. Look at this. What's going on? Right, let's have a third attempt. Let's do this.
Come on, let's go
way.
again. Do you know what though, Jen? I think we got away with it. Nobody's watching yet.
I think we're safe, yeah.
So there we go. That'll be one of our little outtakes of how to make complete blunders when you're going live. So talking of live, we did a couple of posts earlier today just to announce what we were doing in tonight's show. So we're going to cover. We've actually got 14 questions that have come in between people sort of messaging out to us, and we've gone back through some of the questions that we get asked as well. As I say, over the last few weeks, we've covered some of these, but again, we want to start to give you a little bit of data and some backup to some of the stuff and the stats that we've been talking about over the last few weeks. So I'm going to kick off with the first one, which talks about a question that's been coming in about what's the sort of average house sale price around Lincoln at the moment. So we might have tempted fate with a bit of technology, Jenny, with the intro there, but I'm going to try and share my screen because I've got some data here from Rightmove which talks through. Share screen is with two monitors. Share screen. Let's see if we can go in here. Share the need. Which one do we need? The latest regional prices. Yeah, we want one of those. This is the one we want. Right, technology. Here we go. Jenny, you're going to need to tell me if you can see this.
I can see that. Yeah, we're in.
There we go.
Perfect.
Fantastic. I can't see it now, so I'm working on the basis that you can all see what I can see. So, regional asking price trends in March 2024. So, as an agent, I get lots and lots of data through from Rightmove and Zoopla, and there's other suppliers in the marketplace that I use as well to make sure that the information I'm talking about when it comes to the local market is relevant. And it ties into the second one. It's probably, this is the most popular question I get asked, is what's happening with the prices in Lincoln or the area at the moment. So if we look at east of England, down on here, look, here we go, this one here, East Midlands also. The average sale price is £287,000 and 22 pence, which when I've dialed it down into the LN1 to LN6 postcodes, again, it was £290,000, just shy of a few pounds and pence. So we're certainly on par with the region there. And in regard to the monthly change, the prices didn't go up at all in the month of March. However, year to date, year on year, they're up 0.1%. So we're not seeing massive increases, but don't forget last year they went backwards by about 3%. So what we're actually finding, it is bucking the trend a little bit, and at least it is going in the right direction of going up. For the UK, the average sale price now is £372,000 to £324. So what we are seeing, as I say, is definitely an improvement, as I say, in regard to the prices and the movement. And I'll talk to you a little bit later about how long they're taking to sell and those sorts of things. So that was, hopefully that's probably answered two questions. First of all, what's happened to prices? Gone up by 0.1%. It's not going to make you millionaires overnight. Don't rush out there and suddenly start thinking the house prices have gone shooting up. They haven't. The market's better. Average sale price, 288,000 as an average across the region, just shy of 290,000 in the LN1 to LN6 postcode area. So, Jenny, over to yours.
Perfect. Just on that as well, I think, they said the average is about 387 across the UK, but if you take out London, the average is massively going to drop because that's just way above everywhere else. So for anyone that was watching that, those graphs are there, but London is always going to skew those figures.
For the figures, definitely.
Yeah, definitely. So one of the most common questions I get asked, so I thought I'm just going to answer it here because it's probably going to come in at some point, is how much can I borrow? And I get these asked a lot, both in my group, private messages that people send me. And in all honesty, there's not a quick answer to that. So when we're looking at how much you can borrow, we're looking at a couple of factors. First one we're looking at is obviously the income that's coming into the home. That will be earned income as well as form of any benefit income, child benefit, maintenance, DLA, PIP, anything like that. We're going to look at all of the income. Second thing we're going to look at is your outgoings. So these aren't just things like your credit cards and your loans. These are things such as any hobbies that you may have that you're not willing to give up. They could be nursery fees that you have to pay for. They could be leasehold charges, anything like that. So we're going to look at all of the outgoings. And the third thing we're going to look at is your credit file, because that will make a massive difference to how much you can borrow, because the higher the interest rate, due to the fact that maybe the credit file is in the best place, it can be lower amount that you can actually borrow. So when you're coming to find out how much you can borrow, I'm going to need 3 bits of information. I'm going to need the income, the outgoings, and the credit file, and I'll be able to answer that one for you. Best thing to do is either book in a call, send me all those details, and we can do a quick calculation for you.
Perfect. And I know, Jenny, that if there is anybody inquiring about that credit file, best £14.99 you can spend a month is in regard to keeping a really, really close deep dive in regard to what's going on in your credit file. There are free platforms out there. They're going to give you the headlines. They're going to give you the score compared to your local area and your stats, etc. But the link that you've got, so if anybody wants that, again, I'm sure you don't mind sending that out, Jenny.
Absolutely.
But a great, it's a bit of a financial commitment each month, but again, it shows that you can really keep a track on making some difference in regard to your credit scoring. So little tip there, that if you are serious about looking at saving for deposits, knowing what you need to do, how to improve your credit score, everything that again Jenny's spoken about in really, really good context and depth over the last 6 months, really now, Jenny. These have been going for 6 months, these shows. I'd thoroughly recommend getting in touch with Jenny and getting that all set up for yourselves as well. Okie dokie. So next one for me is how long on average is it taking to sell a property in the current marketplace? So last year, as we all know, horrible market, nasty market. Back in a better market, but again, got some data which I'm just going to show to you. So again, let's go to my technical support team here, and let's see what we've got. So, Jenny,
you're loving this, Mike, aren't you? Look at that.
I know. Look at this. Hey, I know. It's good, isn't it?
This is going to come on every week. Mike's going to come on a presentation slide every week.
Well, I think people will know is that, yes, I do like talking, but I do like making sure that I've got the stats to back up what I'm talking about. Because I think if you're going to be, interesting thing on this actually is I'm really working at trying to make sure that you've got go-to people in the industries. It's like your key person of influence in your industry or your marketplace. And I think if you're going to be that go-to person, yes, you've got to talk the talk, you've got to walk the walk, but you've got to know what you're talking about. You've got to have that sustainability that you can show and deal that you know what you're talking about, and there's evidence in that. But also, I think you've got to know your numbers. So that's why I do do a big deep dive into these, so that when we're talking, that you can talk to people with confidence. To be fair, okay. So interestingly, when we look at the city data. Again, this is provided by Rightmove, and this was out a couple of days ago. There is a house price index. So again, if anybody wants a lot of data, and there is a huge amount of data that Rightmove can give you, one of the big benefits of a portal like this is they've got resources to get so much information. If we look at, there isn't one for Lincoln, which is quite surprising actually, because it's done on chimney pot size, but it's not down on here. If we look at our region, so I've looked at Peterborough, and I've looked at Doncaster, and I've looked at Nottingham. They're our most recent one, our closest ones. What we are finding is, if you look here, the average time it's taken to sell a property at the moment is 76 days.
Oh, wow.
But what's interesting is it's taking 20 days quicker this year compared to last year. So last year it was taking 100 days to sell. I'd actually questioned that in Lincoln it was taking longer than that. But if we took that as an average, even if you look across all the other regions, look, on average, it's taking around about that 70 to 80 days. And again, this is taking out London, because London is all down in here at the bottom here. So again, we've taken all of that out. So, it's a little bit more accurate. And if we look at how many days it's taking to find a buyer year on year change, there's some areas where it's only 6-7 days, for argument's sake. When we're looking at our region, east of England and up to the Yorkshire and Hull area and Humberside, you're looking between about 7-8 days up to the sort of 20 days faster. So what's interesting is most of these areas are faster than they were before. You've just got Swansea here, which is a couple of days difference, and another one here looking Oxford. But the majority of them are faster than what it was last year. So that's a positive there. Prices have gone up slightly and they're selling a little bit quicker. But I must stress, it needs to come onto the market at the right competitive marketplace in order for it to get the attention. And because there'll be some, now again, I've got some interesting stats in regard to some of the properties I've put on the market recently, which are selling within 3 to 4 weeks, which means if you look at the other scale, some are still taking 5 to 6 months to sell. So if you're coming on the marketplace at the minute, competitively priced, which is something we've spoken about for the first quarter, they are selling. You've still got properties that were on the market in July, August, September of last year that are still sitting there on the marketplace, and that's going to completely throw the figures again.
Yeah, absolutely.
Okay,
and I think, like you say, I think if it's marketed correctly and it's priced right, they are selling. We just maybe have to be a little bit patient. And look, 23 was the worst hangover anyone ever had. So look, we're in a better place than we were last year, which is good. So next question for me that I get asked a lot is, how do I boost my credit score? It's a key one. And I'm going to give you sort of 6 things that you can practically do to help boost that credit score. But ultimately, if you've had any form of missed payments, adverse, it is time that you need to give, because when lenders are looking at credit score and when you're building your credit score, if you've had, I don't know, a default within 6 months, your credit score is always going to be lower than if you had the default in 12 months, 18 months, 2 years' time. So that's always going to impact, and there's nothing we can do to really speed that up to an element, okay? But there are a few things that you can do to help gently nudge it on the way. So number 1 is to register to vote. You don't have to go out there and vote, though I have a stance that everyone should vote. Well, you're not allowed to moan, but that's a whole different episode. Just register to vote, okay? It's really easy to do that. Everywhere you look at the moment is telling you to register to vote. Second thing to do is make sure your credit history is correct. So your address history is correct on your credit file. You'll be surprised at how many don't pick up maybe a move, or they've got the wrong dates there. So make sure that is all as it should be. Any financial associates that you have that you're no longer associated to, get them removed. The reason for that is they can help boost your score if they've got a better score than you. However, if they apply for some credit, you could see your score drop, or if they've got not so good credit, it could impact on your score as well. So get them removed. And doing those 2 things are dead easy. You just raise a dispute on the credit agency and saying, my address history should be this, and can you remove this financial associate because we're no longer associated, and they will do that for you. Okay. The 4th thing that you can do that will really help boost your score, but you must trust yourself to do this. If you don't trust yourself to do it, just do not do it, because you can make it worse, is take a small credit card. It doesn't have to be a huge credit card. Put less than 30% limit on it each and every month, and then pay it off in full each and every month. Ideally, set up a direct debit to take the payment in full, and then you never have to remember taking it. What I would say with that is, if you can't trust yourself to either not max out that credit card, excuse me, or not to pay it on time and in full, just don't do that. And if you're not sure where to start to look for a credit card, speak to your current bank, because you may have already been pre-approved for one, so it may stop a full search being done for yourself. Number 5, Pay all your bills on time and in full, and this includes your utility bill. So that's your gas and your electric, your water. They do show on your credit file now. And if you have missed payments or you're not paying them in full, it can impact on your credit score. And the last one is avoid excessive overdraft usage. All overdraft usage is should be avoided if you can. But look, I live in the real world. Sometimes we need to go in and out of them each month. If you're living in them, that is going to massively impact on your credit score. If you pop in them and out of them each month, that's not so bad. But where you can, avoid using them. And they're my 6 tips.
Great, really helpful again. Thank you very much. So next question I get asked a lot is, how long is it taken from when you sold the property to when we hand the keys over? So your completion date. So just 2 things here is sometimes people aren't aware of the terminology when agents use exchange of contracts and completion day. So just to clarify here as well, when you exchange contracts, that's when it becomes legally binding. That's not necessarily your move date. And normally there's about 7 days between exchange and completion.
Mm-hmm.
Normally it can be an extended period of time, particularly if you're buying new build. But on average, to say you normally have a date where you exchange contracts, so it's legally binding. You can't back out of that deal under extreme circumstances, I have to stress. So it does happen sometimes, but majority of properties, when they exchange contracts, that's when you're all legally tied into the commitment. And on the exchange of contracts date, all parties will have agreed a completion date. So this is where the agents and the solicitors are going up and down the chain, making sure that everybody's committed, because once it exchanges, that's when it all has to move. Completion date is that it's moving day, basically. That's the language you use. What's your moving date? That's the date that you're going with. That's the day, as I say, you'll be actually doing the move. So depending on region again, we've actually seen it increase. So for Lincoln area at the moment, it's about 13 weeks. Which sounds like a long time, and it is a long time, because you're still looking at 3 months once you've got the buyer, and you could argue, well, what is the hold up in all of that? But behind the scenes, there is a huge amount of work that goes on in regard to the conveyancing and the legal work. I always advise that when you come on the market, get a solicitor instructed and start with the basics of getting your local land registry, having a look at obviously where your boundaries are, getting your property information filled in, which will outline some of the things that we need to know about the property, like insurances, double glazing insurances, fence certificates, boundaries, boundary disputes, tree preservation orders, sewerage, water outlets, utilities. All of that can be answered at the beginning. You can be prepared so that when you do get the buyer, you're 1 step ahead already, and that can shave sometimes 2 to 3 weeks off. The other thing that I'd say is, when you are moving and you're buying and you secure your sale, pay for your local searches on day 1. So some solicitors like to wait until you've got your mortgage offer or your mortgage in place, which sometimes can be best advice. So again, it's judged on each scenario. But if you're waiting for your mortgage application in, for your survey to come back for your mortgage offer before you instruct your local searches, depending on which council and which area and district you move into, searches can come back as soon as within 2 weeks. Some can take 10 weeks to come back for your local searches. Okay. There's also other things that can affect that. If you are buying a leasehold property, or there's a management company and you have to get a management pack, again, they can delay that overall process. So it very much depends on who's in the chain, how many people are in the chain, where that chain goes to. So if it's all local, then great. You're going to be using local solicitors that will talk and communicate with each other. But you could also be dealing from different councils right across the country. And the other thing that I really am passionate about is, you get what you pay for with solicitors. Okay. So if you go to a package solicitor where you're going to go to red team in week 1, then you get moved to yellow team, then you get moved to green team. Jenny, we've talked about this before. We're laughing because we know how frustrating this is. You can't get sent through to the same person because you go down a process, and because it's packaged up, and then it goes to somebody else, and it goes to a paralegal, then it goes to a conveyance, and it's actually usually one of the actual practitioners of the actual solicitors that eventually signs everything off, but they're not going to get involved till maybe 2.5, 3 months down the line. Yeah. Local solicitors might be a bit more expensive, but you can go into a local office, you can talk to somebody who usually be the same person or one of their team that you're dealing with. So saving a little bit of money sometimes can cost you more money in the long term. Okay, so on average, about 13 weeks. So just to manage people's expectations. But if everybody, and again, I've spoken about this, is when you sale agree your property, try and tie an ideal move-in date at the beginning, because it focuses everybody on the point where you all want to move. I'm dealing with a family moving at the minute, and they're going to be expecting a little one. So we've got again, that date can obviously move, but we've got a fixed date on where we are really wanting everybody to have moved by because of that scenario and situation. It's every time we're having those conversations, we're focusing in on it. So answer to the question, 12 to 14 weeks regionally, nationally, but about 13 weeks in Lincoln at the moment.
Amazing. And just on that, Mike, so I'm that person that probably is a bit controversial. So just like you said, pay your searches up front, I'm the other side of the coin that says get your initial underwrite completed first of all on your mortgage, because once you've paid those searches, they are gone forever. So I am the other side. Both are valid points, though, and like you say, it's really down to the individual. Mike's right. If you want to speed it up, get them paid, get them applied for. I don't like spending other people's money as such. Being a bit more cautious, I'll be like, get your initial underwrite completed at least, and then make that payment.
I think the key thing on that as well, Jude, the answer to that is we're both right. But look at the councils and the area you work in. If we're looking locally, again, Bassett Lord, Newark, Nottinghamshire, Lincolnshire are pretty quick, but you can go to other counties and you can be waiting an age, particularly if you move into an area where there's a licensing, property licensing, and you've got management packs. If you snowball of those in together, I promise you it's going to take 4 to 5 months to go through.
Absolutely. And I think, you're right. Look at the different areas, you look at the individual circumstances, and there is no right or wrong answer. It's what that client feels comfortable with, but you will be told, the estate agents 100%, solicitors will be telling you to pay, your mortgage broker will probably be telling you to hold back. So it's up to you who wins.
That's the benefit of having us both on the show, because we're there to look after our clients at the end of it. Ask the right questions and you'll get the good answers, and then you can make an informed decision.
Definitely. So the next one I'm going to answer is, am I classed as a first-time buyer? Now, this is really big in the industry at the moment, especially for people who maybe fell off the ladder and is looking to get back on the ladder. I did a reel on this the other day because I am asked this on a regular basis. So I thought I'm going to try and clear this up this evening for you. So being classed as a first-time buyer, when it comes to stamp duty, if you've ever owned a property in the UK or abroad, you're never going to be classed as a first-time buyer. Okay, so potentially you will always have stamp duty to pay depending on what you purchase the property for. In terms of lenders, we have 2 types of lenders. The first lender will literally say, no, if you've ever owned a property in the UK or abroad, you are not classed as a first-time buyer. Now, the good thing about being not classed as a first-time buyer is you'll probably get a little bit more for your money, and you will probably be a little bit more flexible when it comes to your credit file. So maybe you've had a bit of a credit blip. They may overlook that compared to someone who's a first-time buyer. The bonus of being so the other side then is first-time buyer is if you've not had a property in the UK or abroad, or a mortgage in the UK and abroad for the last 3 years. So some people will wait for that 3 years. I spoke to a couple of clients this week that are going to wait for the 3-year rule because actually they feel that's going to be more beneficial for them with the type of schemes that are available. So being classed as a first-time buyer, you'll have more schemes. So potentially the 0 deposit mortgage or the £5,000 deposit mortgage would become available to you. Downside is you may not get as much for your money, and they may want you to have an enhanced credit file when it comes to applying for a mortgage, just because you haven't had that experience of being a homeowner. But your mortgage broker is going to let you know what's going to be best for you, depending on the lender and your individual circumstances, as to whether you should be classed as a first-time buyer or not.
Okay, again, great answer. Right, next one is, when's the best time of the year to put my property on the market? So I told Kate this. I said, somebody's asked me a question, when's the best time to put it on the market? You know what she said? Boxing Day. Can you remember Christmas to run up the Boxing Day bullshit scam when to put the property on the market? So at least people remember what we've been talking about. So the simple answer to that is, look, it's when you need to move. There's no right or wrong answer to it. We don't have the peaks and troughs like we used to have years ago, where it was all everybody put the house on the market between Easter and summer. Taking into account what I've just said about how long it takes on average to sell the property, 70 days, down by 20. So let's work on the basis of 90 to 100 days on average. And it could take, again, another 12 to 14 weeks to go through. If you're needing to move and time things like schools, job starts, anything like that, relocation, anything like that, you need to be on the market now is the first thing, because if you work that time back, now is the time. Seasonally, look, it is a nicer time to put your house on the market now. Properties look better. It's a nicer time to go out and view properties. Lighter evenings, better weekends, those sorts of things. There's always a feel-good factor about moving in the spring to the summer, and we're never going to get away with that, from that rather. So I think, yes, this market is better now. I think a lot of people have waited again just to see what is going to be happening in the market. Although we've had a busy first quarter, there are more properties coming on. But what I would always say here is if you do decide to put the property on the market now thinking it's a better time of the year to do so, so will everybody else. So your property is going to have more competition, which means, again, you've got to be priced more competitively. So again, your agent will be able to go through all of that information. But I would always say it comes down to when you need to move and when you want to move. But seasonally, these next 16 weeks is traditionally where the majority of the properties that are going to come onto the market are going to come onto the market. So in short, now.
Yeah, absolutely. And I think it's like having a baby, isn't it? There's always pros and cons. There's never really the perfect time to have a baby. And it's a bit like putting your house on the market. There's never really a perfect time. Do what feels right for you at the time that feels right for you. Yeah. So my next one is really a swift one for us, which is, I've had a payday loan. Can I get a mortgage? The answer is a payday loan individually is not going to stop you getting a mortgage. However, there's a couple of things we need to consider. Some lenders won't allow you to have a payday loan if you've had it within 6 years. Santander, it's not even a consideration. And then there's the 12-month rule. Most lenders open the doors if the payday loan's been repaid within the last 12 months. And there's a handful of lenders that will go, look, we don't mind you having a payday loan if you've just finished it, or even if you're in the middle of it, but you're probably going to pay a higher rate for that. So at all costs, I call them mortgage prevention loans. I'm not sure if I meant to. Where possible, try avoid taking a payday loan, because it can really prevent you securing a decent mortgage.
I'm getting some nice feedback in. Bruce, nice to see you watching this evening, mate. Thank you very much indeed for your support. Some good advice on here. Thank you very much indeed. Next question for me is, when do I need to book my removals? Flipping heck. Okay. This is tough, because if we go back to what we've just said about how long it's taken and when you're trying to tie the dates in, there are so many variables which can change that date. So removal companies ideally will want as much notice as they possibly can get to make sure that they've got that availability. But often they'll want to be taking down a deposit, which sometimes can be non-refundable. Okay, because if they book a big removal and that gets cancelled or moved at the last minute, obviously they've then got lorries and people on standby that they're going to have to, stand down on. The advice I will give here is, where we're looking at exchanging and completing with that week in between, sometimes a week isn't going to be long enough, particularly if you're needing a big removal company, and those removal companies that come in and do everything, pack, store, move, get you out the other end, unpack everything the other end. Okay. So the advice here is as soon as you're aware that your mortgage offer's back in, your searches are back in, it's just the last few general inquiries, that's the time really to start talking to the removal companies and finding out their availability. I've known scenarios where people have agreed to exchange and complete and then have been running around frantically trying to get a removal company, and they're booked up. I've known other companies where the things had booked and then the dates get moved at the last minute, and it's so stressful already between that exchange and completion moving day. The more time you can give yourselves, in principle, a lot of removal companies are extremely adaptable and flexible on this. I have to say, particularly the local companies that I'm dealing with on a regular basis, they will always do what they possibly can to help and accommodate it, because this is what they deal with all the time. So they're familiar with it. But I think it's building that communication and relationship with a good company, that you're just setting out that agenda and timescales as early as you possibly can. But definitely when you get into the point of that exchange, that's when you want to be putting down, obviously, the confirmation of when you need to be moving. So yeah, I would say they're on it as early as you possibly can, but certainly by exchange date, you need to have got something booked in firm.
Absolutely. And as always, and we've spoke about this before, moving on a Friday is probably the most expensive day you can move home. So if the chain agrees, try and move on a Tuesday. It will probably save you a few pennies and be a bit easier to get a removal firm as well.
Yeah, and your monies tend to go through on the banking system on a Tuesday, Wednesday, Thursday, a lot faster than on a Monday and on a Friday, particularly around bank holidays. We've got 2 bank holidays coming up in May. If you're booking it for a Thursday or a Friday, well, you won't be able to do it on the Friday, but if you're trying to do it on the Thursday, start thinking ahead because everybody will want that long weekend for bank holidays.
Yeah, absolutely. So I'm conscious of time, but I really do want to answer this one question. So I get it a lot. I want to buy a rental property through a limited company. What are the key things we need to consider? So first of all, you can have what's called a trading limited company, but lenders ideally want it to be what's called an SPV limited company. All you can do in that limited company is buy, sell, rent, flip properties. It's all you can do.
Can you just explain that as well, Jenny? SPV, we're familiar with it. What does that mean?
Yeah, special purpose vehicle, and it is purely for property. You can't do anything else within that limited company. Lenders feel a little bit more comfortable with that, so you're probably going to get a better rate, more lender offering, and it's just going to be an easier transaction for you. They're not going to look as much detail as maybe if it's a trading limited company. So that's the first thing. The second thing is 25% deposit to get any decent rates. There's a couple out there that will do 20%, but those rates are horrific. So you want a 25% deposit. You want to have your limited company opened before you apply for your mortgage, because we're going to want to know what that limited company name is and also the company number. Ideally, you'll have your bank account opened as well before application. There are some lenders that will allow you to open the bank account after you've fully submitted, but they will not release the funds until that bank account is open. And you can, if you have a limited company elsewhere, you can do a director's loan from your trading limited company to your rental, your SPV limited company. Lenders are more than happy with that. And ideally, you'll own your own home, whether that's through a mortgage or without mortgage. And that way you're going to get the best rates as well.
Do you know what? I think in 30 minutes, we've covered a lot of ground in there. So hopefully that's been of use to you all. Again, thanks for everybody's sort of involvement with this week's show. So don't forget, if you're watching this back later on and you want to still get involved, me and Jen are always here to give you all the help and advice we possibly can. So again, just send us over either an email. You'll have seen throughout the show, our email addresses have been popping along the bottom of the screen here. So feel free to reach out there. We're always available to help you where we possibly can. And again, if we've missed anything tonight and you want us to cover that in a future show, again, please send us a message over and we'll make sure we cover that in the next few weeks. So let's get cracked on then with the closing credits. We'll also wish you a very good evening, and we both look forward to meeting with you again in next week's show. Just before you go and you switch off this evening, make sure you hit the like button, just to share the love with us both as well. And again, if you're not following us on our social media, make sure you do so. But to say, have a great week. Look forward to speaking to you all again next week, same time, 7 o'clock Tuesday evening for the Lincoln Property and Mortgage Show.